Good afternoon. Thank you very much for the introduction, and thanks for the opportunity to speak here this afternoon. As mentioned, my name is Chell. I'm a co-founder with a number of other individuals of an organization called Podium Participation Funds. We believe that Podium is an organization that represents somewhat the future of finance. Podium is all about local capital backing local ventures that have global potential. And without trying to turn this into a commercial, I just want to give you a little bit of background of where we're at and why we started it. We came up with the concept in February of '09, and that was really where we bootstrapped it up until about the March timeframe of '09, where we figured out our elevator pitch and what our value proposition was, the strategic differentiators. Over the course of the next year, we built out an online platform that essentially allows our unit holders to give us input on what investments we're going to be making with their money. Now, I want to be really clear. We are not giving them the final decision on what investments are being made, but we are taking that crowd wisdom or that input such that we can understand the trending of our shareholders and what we think the future exit potential of any particular deal is. My experience has been that there's been lots of angels and lots of venture capitalists in the world who are really smart. But the one thing that the really successful ones are differentiated from the mediocre ones is understanding the exit strategy first. We believe that having a crowd help us understand their appetite for a deal up front allows us to determine what the exit strategy is later on down the line. We launched our fund in April 2010. We will do our first closing at the end of this February, and we're on track to anticipate it will be a minimum of $5 million, so it's quite a small fund. And we are expanding into the Edmonton market in 2012. We'll take all of next year to suss out that market. What's our specialty? Really, it's knowledge and systems. So as opposed to just taking information, we really take what we think is the knowledge that we ask for from a large group of people based on a particular investment, and we put it into a system. Our system is such that we do not just simply do traditional due diligence and decide, oh great, this looks like a cool idea or a cool company, let's invest in it. We actually have a very regimented system that actually demands transparency and a weekly reporting process from the companies that we invest in that our shareholders actually get to evaluate. Now, they don't have a huge amount of input after the fact in terms of a tangible decision, but we do get their information, we do get the input from them that helps us understand what's the best way to either grow this company and or liquidate. We see the evolution of the deal, which is the theme of the panel here, is this. Basically, way back when, finance was all about family, and it was all about who you know and who you can trust. Through time, eventually it became force finance, so he who the biggest stick wins. Then it turned into abundance finance, so the person who has the most dictates the terms. As we moved into the industrial age, we saw it was really about production and actually quality of production. What we believe that finance will be driven by over the next 10 to 15 years will be the social graph. We absolutely see that it's who I know and the context that they know me in is going to determine the investment that that person not only puts their money into, but the value that that person determines what that investment is worth. So we are 100% focused on that social graph and determining how the valuation will be constructed and further grown because of the social graph that a company exhibits or inhibits. Our current investment environment, pretty simple for us. It's knowledge, influence, and transparency. So we don't like to be taking a look at organizations, or we don't believe that there are room for organizations out there that don't demonstrate knowledge. And knowledge to us is information and not assumptions. It's about actually taking that information and combining it with systemized or a system of some sort such that there's knowledge. The influence speaks largely to the social influence that a company has. That's driving valuations these days, and transparency. There aren't a lot of organizations, in light of the crash and in light of a number of the debacles that we've seen reoccurring consistently throughout the financial market, where transparency is no longer well, let's say it's no longer an option. Where before we felt, or we've seen, where disclosure is important, and disclosure is what you have to put out to your market, transparency is what you want to put out to your market. Our particular fund, we look at investing in startups, or growth-oriented companies, or restarts. Very, very niche market. We look to invest between $250,000 and $2 million. We can go lower with our angel network, and we will go higher if we partner. We do like to be lead on deals that are this small. And our investment horizon is 2 to 5 years. Our investment legal structure is pretty simple. We like to take equity. We're not big on convertible debt. We're not big on fancy instruments. Our investors are typical retail, if there is a such thing, but they're retail-based investors, and we like to just talk about the one thing that we do, and it's how much of the company that we own, and what we think we can convert that to them. So our funding process is pretty simple as well. What we look for, our funding essentials, pitch essentials, are willingness. Organizations that aren't willing to be coachable, organizations that aren't willing to be transparent, organizations that have a lot of assumptions and don't bring in hard data, we're just not interested in dealing with. For us, it really makes the deal flow vetting process pretty simple. This isn't the Silicon Valley, and this isn't somewhere where somebody can come in and ask for $2 million valuation on a pre-revenue company and expect to, that we're going to take 2% of the deal. We like to own 20 to 40% of the projects that we go into. We're very, very active in management. So on that note, we only have 2 to 5 minutes. I will turn it back over to Michael, and look forward to answering any questions you have on the panel. Thank you.
Thanks, Ken. Our next speaker is from the private equity side, Lauren Jacobson. I've had the pleasure of knowing Lauren since he co-founded TriWest back in 1998. It happened in the first year I was here in Calgary.